Hello and welcome to the day ahead. It is Thursday, April 28th. I'm Andrew Gagan. Well, let's take a look at the overnight session, and a mixed session after a wobbly trading on Wall Street. Equities were supported by a rally in Microsoft and Visa, which helped to alleviate worries over slowing global economic growth and rising interest rates. Sector performance was about split, with tech marginally higher while communication services slipped. Stock specifically, Tesla shares recovered some of yesterday's steep 12% slide on concerns Chief Executive Elon Musk may have to sell shares to fund his $44 billion buyout of Twitter. On the corporate calendar, Microsoft rallied after reporting a strong revenue forecast, while Visa jumped after a predicted revenue above pre-pandemic levels. Facebook owner Meta Platforms taking a hit before rallying in after-hours trade after earnings beat the street, but revenue lagged at its slowest pace since the stock went public a decade ago. Boeing tumbled after reporting an 8% drop in first quarter revenue and flagged it would halt production of its 777X jets through to 2023 due to certification problems. And nearly a third of companies on the S&P 500 have reported results this week. Overall, earnings have been better than expected, with nearly 80% of the 176 companies that have reported so far beating expectations. Typically, only 66% of companies beat estimates. Well, to Europe, equities higher, with the Pan-European index recovering from a 6-week low at the start of the trade. Miners and oil led the gains. German shares, which underperformed through the session, rallied at the close. Focus, though, remains on escalating tensions between the West and Russia after the Kremlin cut the flow of natural gas to Bulgaria and Poland for rejecting its demand to pay in rubles, taking direct aim at European economies. The EU, though, moved to calm any fears in the market, calling the move blackmail, vowing to respond swiftly and acutely.
Our response will be immediate, united and coordinated. First, we will ensure that Gazprom's decision has the least possible impact on European consumers. Today, the Kremlin failed once again in his attempt to sow division among member states. The era of Russian fossil fuel in Europe is coming to an end. Europe is moving forward on energy issues.
To the macro picture, and inflation remains the headline, with growing concerns about global economic growth weighing on FX markets. The US dollar rallying to a 5-year high ahead of the expected 50 basis point rate hike from the Federal Reserve next week. The greenback also benefiting from global growth concerns given the war in Ukraine and China's COVID lockdowns. The euro weakened to its lowest value in 5 years after Russia cut off gas supplies to Poland and Bulgaria for rejecting its demand to pay in rubles. And Germany's economy ministry has cut its economic growth forecast for this year to 2.2%, down from the 3.6% forecast at the beginning of the year. Sterling hit a fresh 21-month low as retail sales slumped in the UK. And the Australian dollar, which bounced higher after that higher than expected inflation figure yesterday, has fallen back again. Bitcoin has pushed back above 39,000 but is down more than 5% for the week. Back home, some relief ahead locally this morning for investors, with SPI futures pointing to a positive start, up more than 0.7%. Global oil prices rose slightly overnight, with US inventories of diesel and jet fuel falling to their lowest since May 2008. Brent crude up 0.3% to $105 a barrel. Iron ore futures were relatively flat at $150 a tonne, and base metal prices were mixed. Gold futures price falling 0.8% to $1,888 an ounce. Looking on the corporate docket locally, all eyes on supermarket giant Coles releasing its third quarter update this morning. Analysts expecting third quarter sales of $8.7 billion, up around 2.5% year on year. And the market will be looking for guidance, particularly given rising inflation. And that does it for the day ahead. See you again tomorrow.